We have Mayuresh Joshi, Head of Equity Research at William O'Neill, now joining in. Mayuresh, good to have you on. It's been a fairly good, resilient day for the market. We are looking at gains of over 300 points in the Nifty. Let's talk about some of the movers and shakers. So in terms of the earnings outperformers, we've had quite a few names. PI Industries, Cummins. Anything else in the last 24 hours? These are stocks we've discussed, but anything else that stood out for you that makes the cut?
Afternoon, Surbhi. I think PI's numbers were pretty decent. So if you look at the margin expansion which has happened, clearly operating efficiencies are now getting played out on the balance sheet. The new products, and specifically I think the bio-based products, are seeing a lot of traction. And therefore the management sounds very, very hopeful in terms of a very reasonable volume growth going forward. In fact, they have launched a protein-based platform, and that should also gain a lot of momentum in the next few quarters as well. So PI is one stock that probably stood out. Yes, Cummins specifically related to its India business. Looking at their parent commentary was a little bit circumspect. But I think good set of numbers that Cummins also has posted. I think this entire pack, Cummins, Siemens, ABB, will keep on posting good set of numbers. And there will be a classical dilemma, Surbi. Whether you chase these stocks with good numbers and execution that they are doing, or look for valuations on the other side, which are very, very expensive for these companies.
Mayuresh, what about IndusInd Bank? Sixth day of losses now for IndusInd Bank. The stock is off 20% from its 52-week highs. The numbers are out. We know what's happened, but continuous selling coming through in IndusInd Bank.
There is some supply side pressure that is definitely there on IndusInd. But to a large extent, within BFSI, we still remain very, very optimistic on the larger names like an ICICI Bank, where our belief is that the deposit mobilization, which is a big headache for the industry as a whole, should start normalizing at some point of time in the next couple of quarters. The other parameters, including expectations of strong retail advances growth, should continue. The provisioning that they have on their balance sheet is extremely strong as well. And therefore, out of the larger names, ICICI Bank is something that we remain optimistic about. Within the mid-cap names, Karur Vysya Bank is something that we remain very, very positive on at MarketSmith India as well. The numbers have been very, very good. The management sounds very, very optimistic moving forward as well. So if you benchmark most parameters that BFS as a space has to look forward to in terms of cost to income, in terms of provisioning, in terms of asset quality, Karur Vysya's core dynamics might show further improvement in the next couple of months.
Mayuresh, look at Fusion Microfinance, limit down 20%, asset quality issues and whatnot. And if you have, is this just a Fusion issue, or is there a broader read through for other MFIs?
No, I think absolutely bad set of numbers. And therefore, I think if you probably look at the microfinance universe, I think you can't just draw a simple, you can't have a same paintbrush for the entire sector as a whole. A few of the companies are doing well within this space as well. The collection efficiencies, in fact, have remained extremely stable. With monsoons expected to be normal this time round, the expectations in terms of a very strong rural comeback might also augur well for microfinance lenders as well. At the same time, if there is a scenario where there is a rate cut before the end of this calendar year, that also aids their entire borrowing mix as well. So that set of numbers for Fusion, but would not paint the entire sector in the same direction.